Eric Mwadhi with Mwadhi.com with US market analysis for the weekend of February 13th and February 14th, 2016. Let's take a look at how US markets closed on Friday. We see a nice close for the Dow, which was up about 2%. NASDAQ was up 1.6%. S&P 500 was up about 2%. Oil was up 10%, and we see that VIX was down 10%, and we had a slight move lower for gold. For the week, S&P 500 was down 0.8%. Take a look at the Dow, which was down for the week 1.43%. And for the week, we see that the NASDAQ was down the least, down 0.59%. So let's take a look at the chart. We begin by taking a look at the NASDAQ weekly. Here we can see that if you take the lows of late 2014, and the level there for the NASDAQ is 4258.44. What we see here is since those lows of late 2014, the markets come back a couple of times and held, did not close on a weekly closing basis below that threshold. So we can see support here. So let's draw that again. So bear with me here. So let's draw that again. So this is the closing low there, October of 2014. We can see that the market has not closed below that number again of 4258 since then. So we are still showing a market that comes back to test that level, is holding. That's not, it's not make or break either way, but it's a sign that the market is finding stability. In other words, the other way of looking at this is market seems to be finding buyers at this level, which is good if you want the market to find some stability at the very least. Now, unfortunately for the week, we broke through the recent weekly closing low just under 4,500. I believe it was 4488. So we broke through that, and that is still showing a market that is skittish. In other words, this is a fresh weekly break, and the market still, in my opinion, continues to be looking bearish on a week-to-week basis. In fact, let's take a look at a 5-year weekly chart for the NASDAQ, and this is consistent with other major markets in the US. If we go back to this weekly chart, 5 years of data, the line we were watching for the market to potentially show support here is still failing. So really, this is a bearish looking weekly chart, because what was support over the last 4 or 5 years, as you can see, the market would come back to this green line. So over the last couple of years, we've been using this for re-entry back in the market, and it's been very instrumental in telling you which way you need to position yourself. Support here, and again here, and all this has led to multi-week rallies to the upside. Unfortunately, right now we are looking at a market that is coming back and failing to hold above that level. So here we see now that this is resistance. So week to week, in my opinion, the market still right now is looking bearish, because what has been support now has become resistance. If we take a look at the NASDAQ on a day-to-day basis, so of course we know we've had this major drop in 2016 alone, right? And after Friday's move higher, the market can get a little confusing, but I'll put it this way. We see an improvement here. If you take the RSI lows of August, the lows of January, and now the lows of the past 2 weeks, this is potentially showing an improvement on the daily chart for the NASDAQ. So that is positive divergence, an improvement in the technicals, while prices are making fresh lows. That might give a market a reason to move higher short term, but I suspect that the move that began late yesterday on Thursday, in other words, the move that began at the lows of Thursday, I think it could be now extended. In other words, I think the market might have seen the most it was going to show on a day-to-day bounce. And I'll also show this, that on the daily, this is pretty much the risk is or I guess the challenge for the market is it needs to break above the RSI top line before bulls can really be excited about the potential for upside. So really you can't be too excited about any bull market run until we clear this resistance line. Now, I'll show you another chart that there's a lot of challenge in the market short term, that maybe Friday's move is all the market gets for now, and maybe we are still looking at the next swing trade to be to the downside. Let's take a look at the Dow, and we can see here that because the Dow has already moved its 10-week moving average, the Dow has already moved its 10-week moving average to fresh 52-week lows. Chances are that the price is also going to have to record fresh 52-week lows. And why do I say that? Because we haven't broken through on an intraday basis for the Dow. We haven't broken below August 2015's intraday low. And because the 52-week low is already trading at fresh lows, or I guess the 10-week moving average is already trading at 52-week lows, chances are prices are generally going to have to make fresh lows. And that's, I think, could play out that way. Keep in mind that even if the market was to move higher, it still has to contend with resistance at a declining 10-week moving average. So there's a lot this market needs to do to correct its charts, even though Friday was a nice positive gain. Now we can see an argument here that one can make that even though we are making lower lows on the weekly, so this is lower lows on the weekly price action, but the RSI is showing an improvement. So if this can continue as the foundation, the market might have a chance, if it bounces on this line and points higher, it might have a chance for a multi-week move higher. So yes, I do contend that this is good enough to maybe set the market up for a move higher, but I think short term there's a lot of resistance that the market needs to clear first and foremost. Now if you take a look at the Dow daily, obviously, and I'm sure everybody's aware of this, but I'll just show it, we are making a lower low in price over the last couple of days. While you're doing that, the RSI is showing an improvement. So that is a good setup, and sometimes this can lead to a multi-day, multi-week rally. Let's acknowledge that and respect that. And just like I showed with the NASDAQ, the problem really here is even if the market was to move for a couple of days higher, it still has to come and decide whether it can break above this resistance line. In other words, as long as the market is trading below the top side RSI resistance, as long as we are seeing resistance, the market still points down. If you'd like to see the market trade higher and hold higher levels, the first thing the market needs to do is move above that resistance line. So for now, since we are trading below the RSI topside resistance, this market remains suspect until it can prove itself. As I mentioned earlier, at the lows of yesterday, so somewhere here, yesterday, we were starting to suspect that the market might move higher. And the reason being that on the hourly, we were seeing the market coming back and showing support on the Dow. So at the lows of the day on Thursday, the market came and hit that level, and we started seeing early signs of support there. And I guess the conclusion from that was you have to be careful not to be going short at the lows here, because the market looked like it might have some type of a relief rally. And of course, off the lows of yesterday, including off the lows of Thursday, including Friday's gain, that was the right way to view this. Now on the hourly for the Dow, we can see that there's topside resistance. So at some point, the market might move and come and challenge this topside resistance. And at that point, we have to see whether the market can break out for continued move higher, or maybe the market could stall. So I think right now we saw the support, and I can also say that there's an argument that this is good double bottom support here. So yes, hour to hour, the market did look like it was going to move higher. But now the question is is this as high as we go? Now, I can argue that this is as high as we go, and I'll show you why in this video, because you can see that there was a break here coming into 2016. Now, this seemingly innocent break broke this market off those levels, and of course since then market's been down, so we can see that clearly we've been down since. Now, if we draw a line from the break level there, you can see that every time we break through, so there was a trend break again here, which brought the market off this level here. So off the level there corresponds with this break. Resistance on the red line and around RSI 50 on the hourly for the highs there. And we settled at the end of Friday, at the highs of Friday, right there on the red line and around 50. So it will not surprise me that this is good enough to begin the week with the market pulling back, and which would be consistent with the monthly charts, which continue being bearish. Coming off Thursday's lows, when the market was trading at the lows on Thursday, we made an observation that the Dow Transports was showing an improvement. And let me show that. We can see that since the lows here for the Dow Transports, we can see that that was good enough after this breakout here, slight breakout on the hourly chart here. And keep in mind the RSI I'm using here is 26. So RSI period of 26. And I mentioned that just in case your chart is different. So you can see here, if we take that line there and we draw a straight line from there, so this entry began the nice move higher. Since then, the market's been bouncing on this green line for nice subtle moves to the upside. And at the lows of Thursday, the market hit that level, and we started suspecting that the market could move higher, and that seems to be correct. So yes, short term, the market had a reason to move higher since Thursday's lows. But now that we've had that move, the suspicion now becomes that maybe now that move has gone as high as it can, because if you take a line connecting the RSI highs for the Dow Transport and extend that line, you can see that we are coming close to topside resistance. And again, this resistance has been stopping any move on the Dow Transports. Every time we hit that level, short-term high and a pullback. Double top there, short-term high and a pullback. Short-term high even here. So we are close to that line. If we can't move above that, then this could also lead to further pullback based on how the market closed. So that's one way of looking at it. I think what I'm trying to say here is the market could have come and moved too fast, too quick off Thursday's lows, and maybe the next swing trade now is going to be down. Also, there's a line somewhere around there. You can see that this corresponds nicely with the resistance here in December for the highs there, and also it broke through here for the highs of November. And since then, every time we hit that red line, we get a short-term stall every time. So those two lines, being the resistance line, the red line, could come in play as of early in the new week. Also, that's one resistance line, and of course the other one is the topside resistance. So until such a time as we can clear those two lines, I think that now the next swing trade might possibly be to the downside. If we take a look at the S&P 500 weekly, we still did close below the previous recent weekly closing low, and the level there, is 1881.14. So that was the January's weekly closing low. We had 2 weeks of rest. After that low, we came back and we broke through that. So as long as the market is struggling to hold and staying below 1881, we are still looking at a market that net, irrespective of day-to-day action, we are still looking at a market that could point down. In other words, if the market wants to build and build on the recent move higher, it needs to move back above that threshold of 1881.14. So it needs to be above that if this is going to be a market that can start repairing its most recent drop. Now, a move higher here would also be good enough, because that would set a stage for positive, negative, or positive divergence on the weekly RSI. So I guess, put another way, market remains bearish as long as it is holding below 1881.14, and it could be bullish if it can move above that threshold. S&P 500 daily has a nice line showing support. This line goes back to 2015. As you can see here, RSI lows, recent January lows, and now an improvement on the RSI. While all this is taking place, we can see that prices have been making lower lows. So prices making lower lows here, but we can see a nice improvement on the daily RSI. So that might set the stage for market moving higher. And just like we observed with the Dow and the NASDAQ, we can see that unfortunately it has first and foremost to clear this line. As long as this line is resistance, then the market continues net to be within the construct of a market that wants to go down. Take a look at the hourly for the SPX. And again, we can see here why the market came off the lows, because we had dropped to fresh lows based on this intraday low here. The market clipped to fresh intraday lows there. But while that was taking place, you can see an improvement on the hourly RSI. And so at the lows of Thursday, we saw the market show support here. We suspected the market could bounce, and that's exactly what we got. So now the question is, can the market continue moving higher? And I'm personally not sure, because we can see that this topside immediate resistance, if you draw the line here connecting RSI resistance like that. So I think, yes, the market could move higher, but until it can clear this RSI resistance, we are still looking at a market that could easily continue trading lower week to week, even month to month. Now let me show you another reason why I think the market moving higher off the lows of Thursday and into Friday might be all she wrote on the top side for now. Because if you take a look at the 30-minute chart, so 30-minute chart for the S&P 500, and here again RSI period of 26, so RSI of 26, you can see that there's immediate problems here, because it's topside resistance coming into play right now. So if the market cannot move above this line, then it stalls and the next swing trade is down. So that's one layer of resistance. And the other layer of resistance is a line coming off this break here. So this break right there. So this break in late December has been a problem for the market. If you extend that line like that, you can see that it has come into play. There was another trend line break here and a break of the red line, which was off the highs here, beginning of February. We've hit that red line once before for the highs there, and now we are coming back to hit that red line. So there are two lines on the 30-minute chart that I think pose a problem for the market, and that's why I'm leaning towards a market that eventually at the beginning of the week might start the week with a down move, resistance on the top side, and also resistance on the red line there. So those two lines are a problem. If the market is to move higher, it needs to move above those two lines. Since it hasn't moved above those two lines, we have to interpret that as suggesting that the market is still suspect. Now keep in mind why I say that is because on the monthly charts for the S&P 500, we still show that the market is breaking to fresh monthly lows. So the monthly charts are bearish. RSI is trading at 3-year lows on the S&P 500 monthly, and the MACDs are still trading at 3-year lows. So the risk month to month continues to be a market that is still very bearish. So yes, day to day we had a nice move off Thursday's lows, but I suspect that if you take a look at as a whole, even the NASDAQ continues to be trading at monthly lows on the RSI and the MACDs. And also we can see here the NASDAQ is moving below 50. As you move below 50 on the monthly RSI, you get a big drop. Right now the NASDAQ so far down about 6% for the month, because it's moving its monthly RSI below 50, the very bearish looking chart, and then the Dow also confirming that markets are still bearish. So fresh monthly break this month there below the 2015's monthly lows. RSIs and MACDs continue to trade at 3-year lows. So the risk, irrespective of day to day, irrespective of hour to hour, the risk continues to be that this market might continue trading lower, and in fact maybe substantially lower. Eric Muaded, muaded.com. Good luck, peace and blessings. ERCS.